All right, welcome to The Explainer. Today we're diving into something big. We're going to connect this huge macroeconomic theory, the idea of a great reset, to what's been happening with the price of silver. It's a fascinating story of how one might actually be a warning sign for the other.
So, it all boils down to this one massive question. Could the entire global financial system just reset? It sounds like science fiction, right? But according to some market analysts, the dominoes are already starting to be set up.
And here's the thing. The core of this idea is that for the first time in a long time, a whole group of powerful countries, we're talking about Brazil, Russia, India, China, the whole BRICS crew and their allies, are making a real coordinated push against the US dollar's dominance, a dominance that's lasted for 50 years.
Okay, so to really get what's going on now, we've got to rewind the clock a bit. This system we're all living in didn't just pop up out of nowhere. We need to understand how it was built to see why it might be starting to crack.
This timeline is pretty wild when you look at it. See, back in 1971, the US completely cut the dollar's ties to gold. Boom. Suddenly, the dollar isn't backed by anything physical. So what do? Well, just a few years later, in '74, a brilliant new system was put in place to basically force global demand for the dollar. And today, the rise of the BRICS nations is taking a sledgehammer to that exact system.
And this was that system, the petrodollar system. It was basically a handshake deal between the US and Saudi Arabia, which pretty much meant all of OPEC. The deal was simple. We'll provide military support, and you guys will only sell your oil in US dollars. I mean, what a move. It created this artificial but incredibly powerful global demand. If you're any country in the world and you need oil to run, well, guess what? You got to get your hands on some US dollars first.
Okay, so now that we know how the foundation was built, let's look at the theory of how it all could come tumbling down. And we're not talking about one single thing happening. Think of it more like a chain reaction, a row of dominoes just waiting for the first one to fall.
And this is how that chain reaction could play out. Step 1. A big oil player, say Saudi Arabia, starts selling oil for something other than dollars. Suddenly, the main reason for every other country to hold mountains of US dollars just disappears. So, what do? They start selling them off. All those trillions of dollars that were overseas come flooding back home to the US, which could kick off some serious inflation. And how do you fight that? You jack up interest rates, which could absolutely hammer stocks, bonds, you name it.
And that right there, that's the heart of this great reset theory. We're talking about the 4 pillars of wealth: stocks, bonds, real estate, and the dollar itself. The idea isn't just that they'd get a little shaky. No. In this scenario, they could all come crashing down at the same time. Why? Because the very thing holding them all up has been pulled out from under them.
Okay, wow. So that's the big, kind of scary macro theory. But how does any of this connect to what's happening in the markets right now? Well, let's shift gears and look at a perfect case study. Some analysts are pointing to the recent massive surge in the price of silver as a direct result of these exact fears.
Now, to really get silver's role here, you first have to understand its relationship with gold. I love this analogy. Gold is the anchor. It's the slow, steady first move. It's what central banks buy when they're getting nervous about regular paper money. But silver is the slingshot. It's the wild, volatile follow-up act. It tends to lag behind gold at first, and then, bam, it just violently plays catch-up when regular investors start looking for their own safe haven.
So the question is, why is silver's price not just, going up? Why does it feel like it's launching? Well, it's not just one thing. Analysts are pointing to what's basically a perfect storm, 4 different forces all coming together at once.
And here are those 4 forces. You've got the big macro picture we just talked about. Then there's this kind of silent supply squeeze happening behind the scenes. Third, you have industrial demand that is absolutely non-negotiable. And finally, you have the wild card, the weird mechanics of the futures market. Let's take a quick look at each one.
First up, that macro backdrop. When you see central banks all over the globe start hoarding physical gold, they're sending a message, loud and clear. They're losing faith in currencies like the dollar. And that makes private money, everyone from big hedge funds down to you and me, look for the next best thing. Silver becomes the go-to for everyone who feels like they've missed the boat on gold. Next, you've got this supply squeeze. And what's interesting is, this isn't about mines running out of silver, this is about national strategy. We're hearing that China, which is a huge player, is basically hoarding silver for its own industries and strategic reserves. So even if the world is mining the same amount, China is keeping more and exporting less, which tightens up the supply for everybody else. And this part is so important. Unlike gold, which mostly just sits in a vault, silver gets used up. It's literally consumed.
It's an essential ingredient in all the tech we rely on: solar panels, EVs, all our electronics, even military tech. And that demand doesn't really care about the price. A company making solar panels has to buy silver, no matter what. That creates a really solid price floor.
And last but not least, the futures market. This is where things can get, well, explosive. There's a huge paper market for silver, where traders use a ton of leverage. So when the price hits certain technical levels, it can trigger a flood of automatic buying. All the people betting against silver are forced to buy it back to cover their losses, and the trading algorithms all jump on board. It's not even about fundamentals at that point. It's pure mechanics, and it can cause the price to just leap higher overnight.
And this quote from one of the analyses just nails it. You take that big picture fear, you add a supply squeeze, you mix in that relentless industrial demand, and top it off with those futures market games, what you get isn't just a bull market. You get a pressure cooker market. It's an environment just waiting for a spark to set off an explosion.
So let's bring it all together. We've talked about this massive theory of a global reset, and we've looked at this crazy reaction in the silver market. What's the bottom line here? What's the main thing to take away from all this?
It really comes down to that relationship. Gold is the early warning, right? It's the canary in the coal mine that the central banks are watching. But silver is the supercharged reaction from everybody else. It often lags at first, tricking people into thinking it's not doing anything. But then history shows it can catch up and even blow past gold in a really violent move. It's that slingshot being pulled further and further back just before it lets loose.
And that brings us right back to where we started, with a really fundamental question. You know, as this 50-year-old petrodollar system faces maybe its biggest challenge ever, it kind of forces us all to take a step back and ask, in this new world of digital money and changing power dynamics, what actually backs our wealth? Something to think about, for sure.